I can make money when everybody's losing money. I'm great. It's so addictive. And yet, over time, it is so wrong, as we see. Does it go down sometimes? Sure. But I talk a lot about how the people who shorted and caught the short in 08, right? Great. Good for you. But you made tons more money buying the low in 09 and riding it till now than you ever made shorting the top in 08. Just look at the market. Look at the stock market. Look how much it's up since then.
Hello, traders. Welcome back to Traders of the World. For an episode this massive, I need a backup. So today I brought in the heavy artillery. Joining me on the mics are two incredible co-hosts. First up, we have Vanessa Souza, bringing 7 years of market experience, a CNPE certification, and deep expertise in market profile and U.S. index futures. Alongside her husband, Rafael Bentes, a true market veteran with a massive 25 years of battle-tested trading experience. Together, they bring top-tier institutional analysis straight from the International Asset Management Desk. Vanessa, Rafael, great to have you both on the show.
Thank you, Flavio, for having me, and Vanessa.
Hi, thank you for having me. It's great to be here.
Thank you.
All right, team, before we dive in, the ritual sacrifice to the YouTube algorithm. If this chat deposits any value into your knowledge, smash that like button and subscribe. It keeps the light on and my caffeine levels adequate. So, let me ask you a question. If you are at a party and suddenly 100 people start screaming and running out the front door, what do? You run out with them, right? Well, today's guest is the guy who looks at the stampede calmly, walks inside the house and makes himself a sandwich. He's a legendary contrarian trader. When the crowd is greedy, he's selling. When there is blood in the streets, he's buying. He doesn't care about your macro predictions, and he definitely doesn't care about the news. He cares about positioning. His strategy is so unique, profitable, that he is a featured trader in the book Unknown Market Wizards. He's the master of the reversal, the king of the fading trade. So, Jason, welcome to Brazil virtually, and welcome to the show. I have to ask you this. When you go to a restaurant and everyone orders the steak, do you feel an uncontrollable psychological urge to order the vegan salad, or just to fade them?
No, it's another step. I don't go to the restaurant. So I don't even go to restaurants. I literally, like, you laugh, but that's, I very rarely go to restaurants as it is. And if they are all going to the restaurant, then I certainly do not go.
Okay.
Every time
against the crowd.
I don't like to be a part of that, the whole going to the restaurant crowd. When I was younger and I worked on Wall Street and everybody went out for like steak dinners and all that, you know, I kind of, I partook, but I learned very quickly that it wasn't really something that I like to do. So,
okay.
So they might all be ordering the steaks, but I'll be sitting at home, you know, eating a bowl of cereal.
Okay. So here's the plan. Grab your coffee, make it a double, and focus, because today's episode is going to completely rewire how you look at the market. Strap in, because right after the break, we are opening the playbook of the ultimate market wizard, Jason Shapiro. We're going to find out why doing the exact opposite of everyone else is the greatest edge you can have, and how fading the crowd takes all the chips. You cannot afford to miss this. Don't go anywhere.
You ever wondered what truly connects traders from Tokyo to London to New York? You just need to learn the language. That language is technical analysis. Understand its signals, and you'll understand the world. Welcome to Traders of the World. Here we skip the jargon and just figure it out together.
Okay, let's start. Jason, I have known Jack Schwager for over 20 years. We are good friends, and knowing Jack, I know he doesn't just put anyone in his books. He audits track records. He digs into your psychology, and he has a massive BS detector. How did you originally get on Jack's radar, and what was it like having a legend like him audit your life's work?
I believe originally I got on his radar because he was searching for people to put in his new book. And somebody that I knew suggested me to him. And he called me up and said, you know, your name was suggested to me. Would you like to talk? And it just so happened that he lived in Boulder, Colorado at the time. And in a few weeks, I was going out to Boulder, Colorado to go to a wedding. So I said, you know, I'll be there that weekend. Why don't we get together? So we did. I went to his place, and we sat for a few hours and had a fun and interesting conversation. And then, you know, he contacted me a little after that and said, I'd like to put you in the book, you know, so let's do sort of, he didn't make a tape or a recording or anything of our first interview, so he wanted to do it again. So we got on, I think it was on the Zoom, and we did a few interviews that he then used as for the book. And how did I feel about it? You know, of course, his first few books had very big influence on me and my trading as I was developing my trading process. So I was honored that he was considering me, of course. But strangely enough, I was also hesitant, just because, you know, at 20 something years old, it's like a thrill, you know, hey, being market wizards and all that. But at 50 something years old, you know, it's like, I don't know, I wasn't looking to raise capital. I wasn't looking to be a public figure. I wasn't looking for fame or whatever like that. You know, I'm very happy to be in my little secret corner of the world, and be left alone. So I was a little hesitant because of that. But in the end, you know, my friends who I had mentioned it to were like, screw that, you're doing it. Because when we were younger, we were so into the first couple Market Wizards books that they were like, look, forget about your hesitancy. You're doing it. So I agreed, and I did it, and I'm glad I did. It's brought a lot of interesting things into my life.
Hey, we are glad because we are knowing each other now. So it's good that you made the book. Rafael, go on.
So, Jason, no one is born a disciplined contrarian. You usually have to get your face ripped off following the herd first. You started out banking in Hong Kong in the early 90s, walking us through your transition from corporate finance to trading in your own book. What was the early blow up, your market tweets on fee, that forced you to realize that following the crawl is a death sentence?
Well, nobody's born contrarian. I don't know. I was born, I don't know if the word is contrarian, but I was born arguing with everybody all the time for reasons I don't know. My mother, who's a child psychologist, could probably make better explanations than I can about why that was. But I was definitely that way most of my life, which of course made it very difficult for me to get along in groups, you know, for me to be a good employee, you know, it makes it very difficult. And I got into trading, and, you know, the good thing obviously about trading is if you can make money trading, then you don't have to get along in groups necessarily. You know, if you want to work for Goldman Sachs, you do. but there are ways in trading that you can be pretty solo and have success. So that was why it seemed like a good path for me. As to how I started to trade that way, you know, it was a combination of things. I started trading, and I started the same way that most people start. You know, I was in Hong Kong. It was a bull market, and I was getting involved. You know, I was buying stuff, and it was going up because it was a bull market. I figured I was a genius. You know, I was young. You know, young and dumb enough to over leverage. And in a bull market, that's a good thing, right? So I made, you know, pretty quick money. And then, of course, as happens when that's what you're doing, I gave it all back when the bull market ended. I have no way of knowing when the bull market was going to end, and it ended, and I gave it all back. And, you know, you go through it, and so I started again, and I traded this, and I traded that, and just certain influences, some of the things from the original Market Wizards books, where they talk a lot about, you know, being against the crowd type of thing. Some of the things being what I think a lot of us go through. You know, you go through like a period where you're losing on a number of trades in a row, and you have that thought, gee, if I had just done the opposite of everything that I did, then I'd be making a lot of money, right? And that starts to resonate, like, hey, that's a fact, right? And then I hear a lot of people say that, and then, you know, I worked in environments where people were trying to trade, and for the most part were losing money, and it just started to click. You know, the first job I had was in a retail brokerage house in Hong Kong, and it was a bunch of younger kids, you know, and we were all sort of trying to trade the Hang Seng Index futures, and there was this guy that sat in the back who was an older guy. And he kind of mentored me a little bit, and I used to watch him, and the whole point was like, what are the chances of a bunch of 24-year-old kids trading being successful at this? You know, if you just use it, think about it logically, right? And the answer approaches zero pretty quickly. So if they're all doing the same thing, then the chances of that same thing working is very, very low, which means that the chances of going the other way is very, very high. So that mindset just started to make sense to me. And then I went down the road of trying to do that and trying to systemize it. You know, it's like you say, we all have to get run over in the trend before we realize it's contrarian. But truthfully, it's the same thing with contrarian trading. You know, I say a lot, there's a very small difference between being contrarian and just being plain stupid, right? And you have to try sort of find what that difference is, right? You're going to go against the trend just because you think that's contrarian. Well, that's just stupid, you know? So you have to define what is contrarian, right? Contrarian price is probably not contrarian. That's probably stupid, right? So what is contrarian? And that's why I look at positioning, contrarian positioning. You know, I'm not going to short something just because price is going up. I'm going to short it because everybody on the planet is already long it, right? So therefore, I'm going to try and short it, right? Which, if you think about it, kind of makes more sense. You know, if we knew that everyone in the world was long something, then it couldn't go up anymore, right? Whereas if they're not long it, but it's going up, then there's a good chance that it can continue. So that's why I focus on positioning as the thing to be contrarian and not price.
There's an ETF that is against the Jimmy Cramer from CNBC that does exactly the opposite. He says on TV, the ETF does the contrary to the anti-Jamie Cramer ETF or something like this, like a kind of contrary. Vanessa, please.
Well, Jason, in finance, everyone wants to be the smartest guy in the room. But you have a famous rule. Predicting the market is a losing game. For the guys listening right now, how to spend 10 hours a day analyzing inflation data and Fed speech to guess where the S&P is going. Tell him why he is completely wasting his time.
So yes, everybody wants to be the smartest person. And of course, nobody is. There might be that one person who is the smartest person. Good. But the market and the price is everybody in the world coming together at that price, right? It's a discounting mechanism, right? That is discounting everyone in the world's take. And that's what the price ends up being at, right? So you don't have to be the smartest person in the world. You have to be smarter than all of those people combined, which clearly is impossible, right? You're not going to be smarter than everybody combined, right? So therefore, trying to play the game that way, I believe, is impossible. And what you're trying to do, smart is one thing, but you're saying that you can predict the future. And I don't believe that anybody over time can predict the future. You know, they talk about Nostradamus or whatever. I don't really think that Nostradamus was predicted the future, you know. I think this many years later, people look at his writings and pick events and say, "Oh, he predicted that," right? They're sort of retrofitting, right? But predicting the future is not something that people are able to do over time. And you can do it once. Hey, I think the stock market's going up, and it goes up. Hey, look at me! I predicted the future, right? But did you? You know, I always talk about the coin flipping thing. You know, if 1,000 people flip a coin, 500 gets heads. Those 500 people do it again. 250 get heads. 125, 60, 30. One person ends up flipping heads 10 times in a row. Is that because he is the greatest heads flipper that has ever lived? Or is it just because he happened to be the one person? It's obviously happened to be the one person, and his chances of flipping heads on that next flip, we know, are exactly 50-50, right? But if he were to go out and flip those heads, one person has to flip heads 10 times in a row. Then that person's going to go out and write a book, you know, how I became the greatest heads flipper in the history of the world, and how you can learn how to flip heads like I did, right? But truthfully, he didn't do anything. He just happened to be that one person, right? So that's what I think is the problem with trying to be the smartest person. It's not really possible, you know, and predicting the future over time is not really possible, in particular in the markets, because they're a discounting mechanism. All the information, you know, is known. If you have inside information, that's a different story. But you know, we know the problem with that. That's called illegal, and you're going to be in jail. So that's not very good risk reward either, is it? So that would be my opinion on that, Vanessa.
Freedom is never negotiable. Huh? Your freedom.
Right.
Your entire edge is built around the commitment of traders, COT report. But here's the catch. Every institutional trader on the planet has access to this exact same public data. What are they missing? When you look at the COT data, what specific extremes or anomalies tell you that the rubber band is about to snap?
So you're right. Everybody has access to this data. So how is there an edge? Right? I think the issue is that this is just one piece of positioning data. I am looking for data that tells me where people are excessively long or excessively short, right? I can guess, but data is obviously hopefully much stronger than just guessing, right? Because the problem with guessing is you end up getting biased with it, right? Oh, I think everybody's long here, so I'm going to start getting short. And you're going to think everybody's long because the market, I hear it all the time, right? Just because the market's going up, people assume everybody's long, but that's absolutely not the case, you know? So I look to the commitments of traders to tell me that. But, you know, the thing about commitments of traders data is if you go back and do a bunch of testing and all that, it's very difficult. It's not the greatest predictor of markets, quite frankly. You know, I'm looking for massive extremes in the positioning, okay? So you have to define massive extreme first. But even once you do define massive extreme, it's not necessarily the greatest predictor. So when people test it, it doesn't test very well on itself. All it really gives you, in my view, is what you need at the end of the day. If we're not trying to predict the future, what are we trying to do? We're trying to get into situations where the reward is greater than the risk. That's what we're trying to measure, right? If I'm wrong, I'll lose $1. If I'm right, I'll make $5. And I want that trade. I want to put that trade on every single time, right? I may be wrong. I may be right. But if I'm wrong, I lose $1. If I make $5. So that's what this commitment to traders does, is if people are mega long something, then if the market does, it doesn't mean the market's going to go down. But if the market does start to go down and the news flow should start getting negative, then you have a lot of people that are trapped long that have to start getting out, right? And there's no one really to take the other side because all these people are already long. So all of a sudden, whatever the rules are, the moving averages start getting hit or whatever causes people to start getting out of stuff, it starts flooding in. And then the market could go down a lot. So that's really what commitment of traders does. I don't think that it's necessarily a great predictor of markets, which is what people are looking for most of the time. But it's a great measure of risk reward over time. And it also has the benefit, I think, of being a great risk manager in that it helps me, at least for me, as somebody trying to pick these market turns, it helps me avoid shorting markets just because they've gone up a lot. You know, if they've gone up a lot and the market, and I don't see people as super long in the commitment, well, then I'm not going to short it. So it helps me avoid fighting the tape just for the sake of being stupid contrarian, right? So I think those are the advantages to it. And I think that's why most people don't like it, because that's not what they're looking for. They're looking for it to tell them, hey, every time this happens, the market goes down, or every time this happens, the market goes up. Well, it doesn't do that. I have more losing trades based on this stuff than I do winning trades. And most people can't handle that, right? They don't want that. But like I say, my winning trades are much bigger than my losing trades. So over time, I put together, you know, a positive return stream.
This is where amateur contrarians get slaughtered. They try to catch falling knives just because sentiment is bearish. But you don't do that. The COT report gives you the setup, the load gun. But what is your actual trigger to pull it? Walk us through the mechanics of your reversal formula.
Yeah, that's an important point. So it's about, you're right. The gun is loaded. When do we want to pull the trigger? That's the big question, right? And I can tell you the first thing is you don't want to pull the trigger just because the gun is loaded, all right? If you're going to get long just because the COT is showing people are mega short, or you're going to get short just because the COT is showing people are mega long, you are going to get run over, right? That is not enough. So what is the way that I do it? I'm waiting for the market to confirm to me that this is the case. And the way that it confirms, some people will say price does that, right? Okay, so it's been going down, now it's turned and it's crossed over the 20-day moving average or something, and so now it's time. Some people will do it that way. I like to do it based on being an old tape reader. And again, based on things that a lot of people in the Market Wizards books talked about, which is confirmation via news failure. So here's a market that's been going down a lot. And now everybody has gotten super short. I start paying attention to why is that? What's the narrative? What's the bearish view that everyone is taking, right? And so now I'm looking for the news flow to come out to confirm that bearish view. So everybody's shorting the stock market because inflation is very high. And therefore the Fed's been raising rates. And that's been very bearish the stock market. Okay, good. So now everybody's short. Now we get a new piece of data come out, CPI, that's higher than expected. So that's bearish, right? And yet the market doesn't go down on it. If you look at the exact low day of the stock market, what was it, 22? That was the bad year in the stock market. If you look at the exact low day in October of 2022, it was on a CPI day. The stock market was coming down, again, because inflation was too high, the Fed was raising rates, right? And in October of 22, we had a CPI come out that was worse than expected, a higher CPI than expected. It was the highest CPI print for the entire run up to that point. So it was clearly a very bearish number. That's what was driving the bearishness, and this was a very bearish number. And what happened? The stock market went down, as you would expect, except it closed up on the day. And that's what I'm looking for. Here's every reason that these bears are bearish we just got, and the market can't go down anymore. Why is that? Didn't they see the news? Clearly, everybody saw the news, right? It's because, in my view, everybody is already short, so they can't get any more short, right? So that's when I buy it. And that, again, does that work every time? No, but it gives me a few really good things. It gives me, first of all, so my entry would be the close of that day, right? Closed up on the bad news, I'm long. My stop is the low of that day. It should never go through that low. Somebody who sold that low is somebody who, after the market was going down for a year on bad CPI stuff, decided to wait until October and the worst CPI print to short it. That person should never make money, right? If it were that easy, we'd all make money all the time. Buy good news, sell bad news, and we make money and it's free, right? And obviously it's not that easy. So in my view, that person should never get paid on that trade. So that's where my stop is. If they do get paid on that trade, well, then clearly the trend is very strong and I don't want to be fighting it, right? So it gives me my entry and it gives me my stop. And it's just not some random stop. Hey, I'm going to stop if the market moves X% against me. It's a stop point that makes sense, right? Towards this type of logic. So have my entry, have my stop. Now I know what I want to risk per trade, and that's up to each individual person. Let's say you want to risk 1% per trade. Well, now you know how to size it. Here's my entry, here's my stop. I'll size the trade so that if I get stopped, I lose 1%. And you go, game on. Either you get stopped or it works. And that's how I enter a trade. It's on this news failure event. And it can be tricky because you have to start to, especially some of these smaller markets we trade, sometimes cocoa, coffee, they don't have news come out all the time. Sugar, these don't, although I've been following a lot of Brazil lately, coincidentally, because I am looking for where to get long sugar. But sometimes you don't get a lot of news. Look, the stock market, the bond market, the currency markets, we get news every day on this stuff, right? These other markets, sometimes we don't get very much news, but that's okay too, because then we don't overtrade and we don't overthink it. It becomes this discretionary read on the news, and people are forever asking me. I have this Discord, and people are always going through, was this news seen as good news? And there's a news failure. Is this bad news? What do you think? And I don't have any special powers as to reading the news, but I always say it should be obvious. If you're questioning whether it was bullish or bearish news, then I wouldn't act on it. It should be obvious that it was bullish or bearish. That's how I see it.
Okay, thank you. Vanessa?
Your favorite entry signals is where hard news hits the wire, but the market simply refuses to go down. It's exhausting. Can you give us a specific recent example of a trader where headline were tariffing, but the price action screamed at your to buy?
Well, I think, like I say, if you look at that S&P one at the bottom of 2022, that's the most glaring one. That's a very obvious one. there were other ones along the way in this bull run of the stock market. After the whole, after the whole Trump trade fiasco stuff that was going on last April, you can look at the day that the market bottomed. There was the same thing, right? We came in, I believe, if I have the date right, gee, I don't know, but it's the exact low day, April. I'm not seeing it on my chart here, unfortunately. My eyes are not very good, but we came in, the market had been going down because of this whole trade thing and the whole tariff thing, and it was coming down very quickly and very hard, and everybody knew it was the end of the world. And something happened over the weekend where he announced even more horrible trade stuff. And the market gapped down on Monday, and was down quite a bit again. It was like, here we go again, and it closed up on the day. And there was never any kind of, this was before the whole taco thing was invented, right? So there was never any other news. He hadn't gone back on that. And we had a reversal day on that low, and that turned out to be, again, the exact low of the move. And you had to sit through some volatility. It went up a lot, and the next day it was down, and then it had a big up day, and then it had some down days where it probably gave back half to 3/4 of that gain, but it didn't take out the low, and then it just started going up and really
April 8th. April 8th.
April 8th. Thank you. So that's an example. Every trade that I do kind of is an example of this. I haven't done a lot of trades recently. Like I'm looking at the Australian dollar here to get short, because I'm seeing people are excessively long at this point. Last night we had higher than expected CPI, which of course makes people believe that there's a higher chance that they're going to raise rates in Australia, which is bullish the Aussie dollar. If the Aussie dollar were to close down today, that would be an example, but it doesn't look like the Aussie dollar is going to close down today. So therefore there's nothing for me to do, But if it were to close down today, that would kind of be an example. There was examples at the end of, at the beginning of last year. I don't know if we can remember that far back, but as funny as it seems, at the beginning of last year, the dollar was seen as the greatest asset on the planet, right? This is when we were going through the whole American exceptionalism thing was out there. That was the big narrative at the time. The cover of the magazines was talking about American exceptionalism, and the dollar was seen as the greatest thing in the world. And not coincidentally, the positioning in the currencies was agreeing almost across the board. You had the Aussie, the Euro, the British pound. They were all showing people mega short all of those things coming into the beginning of the year. And lo and behold, pretty early in the year, we had some positive dollar news come out, and the dollar couldn't go up anymore. And you could have caught it. I caught it in the British pound just because that happened to be the one that had the best failure. But you could have caught it in any of those things: Euro, Aussie, British. You could have bought any of those things. So that was an example. The examples are, like I say, basically every trade that I make. So, but the first thing is we have to see it super crowded before I'll even consider it.
A Trader Brasil comemora 25 anos e quem ganha é você. Fomos eleitos por 2 vezes pela Rank Awards em 2024 e 2025 como o melhor divulgador financeiro e a melhor academia de formação de investidores do Brasil. E hoje temos um presente para os inscritos do canal: 10% de desconto em nossos cursos usando o QR Code que está na tela. E não se esqueça, é muito importante que você nos siga nas redes sociais. Curta, comente e compartilhe.
And like I say, does it work all the time? I'm here to say the answer is 100% no. Does consensus sometimes make money? Of course it does, for periods of time, right? Does trends make money? Of course it does for periods of time, right? But we're trying to put as many things on our side as possible. People are way too short. People are way too bearish. And now the market can't go down on bad news. So hopefully that gives us a good chance of having a trade that has much better return than risk.
Let's talk screen time. You are highly data-driven and sentiment-focused. When you finally pull up a chart to time your entry, what are you actually looking at? Are you cluttering your screen with moving average, MACD, RSI, or are you strictly looking at previous swing highs and lows to define market structure? If you want to show your charts, please be our guest.
I'm not looking at any of that stuff.
Eddie.
I mean, I just gave you the exact example of what I'm looking for. I have the Aussie set up. I'm positioning as a short. So I know that. I get the data on Friday. I run my thing. It tells me, here's the markets that are set up as a short. Here's the markets that are set up as a long. There's not very many at any one time, only a couple. Sometimes there's none. Sometimes there's 2 or 3. Aussie, set up as a short. Okay, so now all I'm trying to do is figure out where is there going to be a news failure. That's it. So I look, well, what's coming out in Australia this week? Okay, well, CPI is coming out on Tuesday night. My time, 7:30. Tuesday night, my time. Australia is releasing CPI. CPI is a pretty big mover, obviously, of currencies. So the number came out. That's all I'm doing. And then if it closes down today, then I'm going to sell the close. That's it. I have nothing to do with moving averages or any of that stuff. It's kind of a fun example today because one of the things I say is, you know, you have to, and this just comes from the experience of doing it the wrong way enough times. You have to wait for the close to make the decision, right? You can't do it too early in the day because there's a lot of intraday traps, you know. And if you look at the Aussie, the number came out, the Aussie gapped up, came off a little bit, then it really went up a lot. And then suddenly, by the time I woke up, it was actually going flat on the day today, intraday. And you could have said, oh, well, there it is. There's the news failure. It's gone flat on the day. But that was as of like, you know, 6:30 in the morning this morning, right? I'm waiting for the close before I decide anything. Because that's what happened. Ever since 6:30, it's now gone straight back up and actually taken out those overnight highs. And it's on new highs here. So I'm glad that I didn't decide at 6:30, oh my God, this thing is failing. I'm going to get short here. I've done that too many times in my life and learned that lesson. So you have to be patient, you know, and that's the other thing. Why don't people use COT more? You could hand this to people and it doesn't matter because, you know, people have the same behavioral issues. You know, they don't want to be patient. It's very difficult to be patient, right? I miss trades a lot, you know. Okay, so what? You know, people don't like to miss trades. You know, it's developing patience and discipline and all that. That's much more important than the whole process. I mean, look, I have a service now that I started when people were asking me after the Market Wizards came out. A lot of people were asking me, can I teach them? Can I this? Can I that? So I had one guy start this web page. And people are, are you worried that if you're showing too many people what you're doing, that, you know, it's going to arb out and it's not going to work anymore? And my answer is no. You know, first of all, since I started the web page, my returns have been very good. So clearly it's not arbing out. And second of all, it doesn't matter because people have to develop the discipline and all that in order to do this successfully. Just like they have to develop the discipline and the patience to do anything in this business successfully, right? You can hand somebody your system. It doesn't mean that they can trade it, you know. In fact, I encourage people not to trade my process, you know, because they should trade their process. I encourage them to take the things that I teach and add things that other people teach and take things from everywhere and develop your own process that makes sense to you, that fits your personality and fits your discipline, because that's going to be a lot more important. Just copy trading, Jason Shapiro is, in my view, a road to ruin.
I think that the most important that you have a secret sauce that it's most part of your way to see the market, and together with your screen time that you're trading, a lot of years, and you can, know the way you can short or not. That is something that your own personality to do that. You can share this. You can follow. You can teach this.
I agree. You have to trade your personality. There's plenty of ways to make money in the market. I happen to be this kind of very contrarian person, and all that. So therefore, for most people, it's scary to, especially when you lose money. By definition, if I'm losing money on a trade, then everybody else is making money. And people are not okay with that. Most people are not okay with that. You don't want to be losing money when everybody's making money. You feel like a moron, right?
Yeah.
I love it. I love when everybody is doing one thing.
The problem is the size
interview on YouTube, and I say, here's what I think. And it gets filled with comments of how stupid I am, because I'm not seeing the fundamental story behind this, or I'm not seeing the technical story behind this and all that. I mean, if I'm shorting something, the fundamental story is always going to be bullish, and the technical story is always going to be bullish. So I love when people are arguing with what I'm saying. That turns me on, but most people, that's not the thing. And let's not forget, you can make money trend following too. There's plenty of people that make money trend following. You have to go, and it's a lot, in a way, easier. And I talk a lot about things that are trend stuff. Like a trend stuff that's not crowded, for example. I think is a great trend.
This type of the way you trade, that's that brings you a lot of haters that doesn't like you because you're always against the crowd.
It's funny because
yes,
I've worked at a hedge fund, let's say, right? I worked at a big hedge fund, and you can't win, because if I'm shorting something and they're all buying it, well, then I'm the jerk, right? And if I get it wrong, well, then I'm the jerk. Oh, couldn't you see? We all told you that it was going to do it. But what's even worse is if I'm right. Now I'm really the bad guy, because now they're all wrong, and they're not going to want to admit that they're wrong. These guys all went to Harvard MBA or whatever, you know what I mean? I'm just some jerk that went to the University of South Florida. So how could they be wrong and I be right? So now I'm really the jerk, so it's a very difficult position to be in. But like I say, it's a position that I have been in since I was a kid. I wasn't hanging out, with the popular crowd, and I wasn't, that wasn't me. I was always the jerk. I mean? So I can handle it because I'm used to it. I've never had a job, I don't think, in my life that I was ever fired from, that I wasn't fired from. It's nothing to be proud of, but it's kind of who I am. So
yes, perfect. So because you are entering turning points, your risk reward ratio, it's incredibly skewed in your favor. Operationally, how do you manage the risk? Is your stop loss mathematical percentage of your account, or do you just place it in a strictly few ticks below the low of the reversal candle?
yeah, no, that's what it is. It's the low of the reversal candle. That's where my stop is. If I'm buying, it's the low of the reversal candle. And like I say, I have a set amount that I risk on each trade. For me, it's 70 basis points. I kind of have a low risk tolerance. That has tested for me, first of all, when I back tested it, but now it's been 26 years of real trading. That has brought me to the point where I've been able to avoid a 5% drawdown. I've been able to keep it lower than 5%, and that's where I want to be. A lot of people will say, well, why don't you up it to 10% and your returns will be doubled? Why don't you up it to 20% and your returns will be quadrupled? Well, maybe, maybe not. You know, would I have the risk tolerance to be able to handle that? Or would it get into my head psychologically and I wouldn't be able to do it, right? So that's just where I'm comfortable, especially at my age and my heart health. I prefer lower volatility. And the good news is the people who I manage money for, if they so choose, they can lever it up and not even tell me. You know, if they're comfortable with a 10% drawdown, then hey, you know, tell me I'm managing $50 million when I'm really only managing $25 million, you know, then they can lever it up if that's what they want to do, right? I don't charge management fee. You know, I charge a little higher incentive fee than most people because I don't charge any management fee. So it doesn't make a difference to my clients if they tell me to double the asset size. They're not getting charged twice the management fee because the management fee is still zero. So if they want to, and that's why I do that, quite frankly, because I know a lot of people want more leverage and I know I'm not comfortable doing it. So that's how my stops work. And I have to assume some slippage. I'm not going to get stopped right at the exact low of that day, you know, 99.9% of the time. You know, it's probably going to be a little worse than that. Sometimes it's a lot worse than that, but usually at least a little worse than that. So I put on size to risk 70 basis points, and then I'll kind of round down a little bit. So that I'm really maybe risking 65 basis points to the stop, knowing that along the way, I'll probably get slippage on the way out.
Contrarian trading can be lonely. It often comes with a lower win rate, maybe 30%, 40%. But your winners pay for all the losers. Psychology. How do you handle getting stopped 4 or 5 times in a row without abandoning your systems and throwing your monitors out of the window?
I've been doing it for so long. I've had so many losing trades. You know, it's like at this point, am I going to say I'm completely unemotional against it? No, I hate losing money, just like everybody hates losing money. It causes a little bit of stress, but I guess I've been doing it so long and I have my track record. I know what it looks like, that I just kind of see it as part of the game, you know, it's part of the game. It's an unfortunate part of the game, but it's just part of it, you know. What are you going to do? You know, what are you going to do? As long as it works over time, which knock wood to this point it has. I sit here, I mean, you know how it is. I'm a trader. I'm completely paranoid all the time. I'm of the belief that this has been 25 years of complete luck, and that luck is going to run out this year. Every year, I believe that this is the year the luck is going to run out, and I'm going to be done. And the question is, if I don't have an up year this year, I haven't had any down years in 25 years, right? That's kind of impossible, right? So even if I have a down year this year, does that mean that it's over, that it doesn't work anymore? Probably not, you know. But, you know, so at what point do you say it doesn't work anymore? I'm a big believer that the theory of what I do will always work. Whether I'm measuring it right or whether I'm catching it right, okay, that might not always work. COT may not always be the best way to find this, right? The news failures may not always be as obvious as they used to be. That could change. But the idea of getting short things that everyone in the world is long as they stop reacting well to good news, you know, I think that has always worked and will always work. But like I say, whether I catch it right, that may not always work. And hopefully I'll be smart enough to understand when it's not working and try and figure out a better way to catch such things. Or I'll be smart enough to just say, hey, I had a good run, I'm retired. You know, we'll hopefully I don't have to find that out, but you know, I'm consistently monitoring for those type of things. But yeah, the losing trades suck. They always suck. But it's part of the game, unfortunately. If you can't take losing trades, then you're in the wrong business, you know.
That's right. By the way, let's speak about the passive flows. Today, the tape is dominated by massive retail options volume, especially zero DTE, and trend following algos like CTAs, vol control funds, and everything else. When you are looking to fade the crown today, how is your primary target? Are you fading the retail meme stocks traders, or are you running the big institutional trend followers who got trapped?
Hopefully it's both.
It's Jason, it's hard to be against the BlackRock and Vanguard, but it's truly, when you are right, the payout is very high.
No, you're right. And this goes right into the last question as well, which is with all this new type of stuff, like zero GTEs or whatever, and is the COT data capturing as much as it used to capture, you know? And my answer is, I don't know. You know, it never captures everything. I have had, when I used to go out and raise money, I would run into these institutions and they would always come up with the same question, right? I heard all the questions on this stuff already, because when I was first starting and I was trying to raise money, I met God knows how many hundreds and hundreds and hundreds and hundreds of potential investors, 99% of who did not give me money, right? But I had to go on these meetings all the time, right? And the one question I used to get a lot was currency markets. The futures markets are such a small part of the currency market. Why would you think that the COT is capturing any kind of edge in currency markets? Seems like a fair question. Seems like a reasonable question. And I had two answers, one of which was a little bit of a wise ass answer, but which I believed in more, and one of which I was sort of my more toned down answer. The wise ass answer being, all I know is I've had great success using this to trade currencies. So why do I need to question it any more than that? It's worked. Some of my greatest trades have been currency trades. Last year, a large portion of my P&L came from that dollar trade at the beginning of the year, right? So why do I have to question it if it works? That's sort of the trader's answer, right? But the institutional investor answer, you know, is not necessarily the trader answer. So I just see it as it's a sample, you know, it's a sample of the larger thing, and hopefully it's a representative sample of the larger. I mean, you can say the same thing in the stock market, right? The S&P futures are only a small piece of the overall volume in the stock market. So why would the COT be any good there either, right? I don't know, but I know that the stocks have been the best over time for me trade. The most profitable thing for me has been stocks. And the second most profitable thing for me over time has been currencies. So, but like you say, with all these new things coming out, is it still capturing that? And my answer, which was the point of what I just said, is as long as it's working, then that's the only answer I know. You know, that's the only way I know how to truly answer this stuff. Is it still working, right? And as of last year, I had a great currency year last year. So as of last year, the currencies are certainly working. I had a great stock year last year. So as of last year, the stock stuff is still working. So as long as it's working, that's the only answer I can really know as to whether it's capturing the stuff right, you know? And if I start to not make money, if I start losing money, then maybe it's not. I don't know if that's why. Maybe it's because my read on the news failures has become worse, or who knows why, but that could certainly be one of the reasons why. COT is not capturing what it used to capture because of all these other things that are going on.
Looking at the global board right now, equities, metals, currencies, crypto, commodities, agro, where is the crowd completely offsides?
Sugar.
I won't ask for a prediction, but what is the most dangerous crowded trade you are monitoring today? Sugar?
Sugar. Sugar is the most offsides trade in the world right now, according to the COT.
Okay.
Massively short sugar.
Okay.
And some of the other soft commodities as well. Cocoa, coffee. These are the most offsides trades here.
Okay.
What may be even more fascinating, I think, right now, and something that I've been sort of pushing in my newsletter every week is not so much like, yes, those are the most crowded trades, and I talk about that, and we try to monitor what are the news things coming out, and therefore where's the bad news that the market can go against. But what's more fascinating is what's not crowded right now to me, right? Gold, silver, oil, even stocks, right? They're not crowded. So therefore, if you're trend following these things, and if you're going with the tape, there's a lot less to be worried about because they're not crowded. You would think that they would be crowded, but they're really not. People like to say they are, because they're looking at price. One of the more interesting things along those lines, there's no COT for individual stocks, but we all remember what NVIDIA did when it took off, right? It took off. And then after it took off more, right? And then it just kept going and going and going. And there's no COT to measure where positioning was, but I can tell you, because, and this isn't just retrospect, because I mentioned it every week in my newsletter. This is part of why I put these things in my newsletter. So there's actually, because my newsletter used to be for me only. I wrote it for myself for 20 years. And now it gets distributed, on our webpage and all that. But it's because I have a way to go back at the end of the year, or at the end of the quarter, at the end of any period, go back and see, am I just talking bullshit here? Or was I actually able to monitor this in live time? And one of the things that we were monitoring in live time was the fact that everybody on TV was saying NVIDIA is overdone, it's overvalued, and it's ridiculous, right? I knew people across everybody that I would follow and listen to, and on YouTube, they were all saying NVIDIA is ridiculous, NVIDIA is a short. So it wasn't getting crowded long as it was ripping, right? So therefore, stick with the long, right? It's the hardest thing to do, right? That whole way up, going all the way back to 2022, people were fading it the whole way. Not so much anymore, we know, but that whole way up, they definitely were. And I was hearing stories from people that, that I manage money for, who have other people managing, who were telling me that their discretionary equity guys were all shorting NVIDIA, So sometimes the interesting thing out of the COT stuff is not necessarily what is crowded, but what isn't crowded.
Jason, what do you think about this AI going and destroy the software? And we see a lot of foreign position on the software space, and it's something this setup, it's something like you like it. Because everybody's short, everybody say, oh, software is gonna rip off the world. So this is the type of trading that fits you very well.
Are they super short software? I don't know, because I don't have data. Again, I can only read to what people are talking about. You do hear a lot of people saying it's overdone and that it's a buy because it's oversold. I mean, my whole view has been on that. And again, I'll tell you right now, my views sometimes are right. But you know what? Oftentimes they're wrong. Okay, so take it for what it is. All right. My advantage in the market has never been my ability to predict the future. Right. It's my ability to hopefully find good risk reward situations and get into them in a disciplined way. So, but my view has been that, we've had a good 30 plus years of investing in intellectual property, right? Forever, we had businesses that invested in plant and material and then tried to turn that into some sort of return on investment, which would be good if it was 25% return on investment would be very good. Then we had the computers come, and intellectual property, you didn't need plant and equipment. So your return on investment became not 20%, but hundreds of percent, right? Which is why the QQQs and the tech stocks have outperformed so immensely over the last 30 years. Well, now there's the possibility, thanks to AI, and I am no AI expert by any means, but it seems to me like we're now going back the other way, right? All that intellectual property is becoming less valuable, whereas the things that AI can't do, like mine for copper, plant and equipment, takes a lot of that stuff, has become valuable again. So that's an interesting change if that's real, and suddenly it switches the other way. And I don't believe that can be positioning wise unwound in 2 months. 30 years of what people have done, I don't think can get unwound in 2 months. Now, I believe the outperformance of software over like the Dow we were looking at the other day, it's given up about half of that outperformance from the last like 15 years in 2 months. Okay, outperformance is one thing, but if you look at things like the weightings in the S&P 500, the weightings of things like materials and mining and even energy compared to the weightings of, of tech, it's not even close. It would take years before those weightings can adjust to a point of overweight, that other stuff. So I think we're in an extremely interesting period right now, clearly, because of this whole AI thing, which again, I am certainly no expert. I do spend, just because I find it fascinating, I spend a lot of time on the weekends listening to people about it. I don't know if these people know what they're talking about or not, so I try to listen to as many ideas as I can. Obviously, I try to listen to the people who are supposedly knowledgeable in this stuff, but I don't think they can tell the future either, quite frankly. But I think this is why we're seeing so much non-movement in the indices now, but so much movement across different stock sectors that are so different, because there's so much uncertainty about the future here, that clearly uncertainty provides volatility, and I've been pushing the idea pretty much this whole year that I think that's where the opportunity is here, is in the dispersion within the stock market rather than the indices themselves. You can see the indices have gone nowhere for 6 months. I was late to that idea, quite frankly, right? But the indices have gone nowhere, but the dispersion has been huge. So that's where I think the thing is. And again, I'll get to the point, which Vanessa had mentioned before. She clearly had listened to some of my thoughts on videos or whatever, where you don't have to be an AI expert, because the tape is telling you what's going on. So just like where I won't buy something until I get a market confirmation because of the news, you shouldn't be doing anything unless the market's confirming it anyway. So, one of the big things that's coming out here, and I've been talking about for a while, and I go back and forth on, because it's becoming pretty consensus, but is it crowded, is you guys, Brazil, the Brazil stock market. It would seem, you tell me if I'm wrong, please, because I know very little about it, but it would seem that Brazil would be a great beneficiary to what's going on here. If the world is short of these materials that are needed in this great AI reset, then it would certainly seem that Brazil would be a beneficiary of that, right? Okay, there's the theory. Is it right? Is it wrong? Who knows? But certainly the market is trading well. So why not trade that theory as long as the tape is confirming it? Be with it, right? And that's sort of good trend following, in my view, right? And once it gets over discounted in, if somehow we can measure that, and once it stops reacting well to this type of stuff, then maybe you get out of it, right? And then maybe it's too crowded. How do we know if people are too bullish or too bearish Brazil? Clearly, there's quite a bit of talk out there about what I just said, the bullishness of it. But if you're fading it, you're fading the tape right now, which is stupid, right? Wait for the tape to confirm it's no good anymore, and then get out of the trade, right? And it's the same thing, I think, with all these general ideas. Yes, a lot of people are talking about these ideas, but they're working, being long materials versus software is working massively, right? So until it stops working, why fade it? You're fading price. You're being a wise ass contrarian instead of a positioning contrarian, I think.
Jason, this is the question we ask every master who comes on Traders of the World. Looking back at your incredible 30-plus year career, first, what was your best trade? Not necessarily the most money, but the most perfectly executed according to your rules. And second, what was your worst trade? The one that still gives you nightmares.
Best trade, isn't the most profitable trade your best trade? We can pretend that it's not. But
maybe the first one that everything comes together. I don't know.
Yeah, no, that's a good point. I think in 2015, if I'm not mistaken, it was, the Swiss came in and said that they were going to decouple from the euro. Over the weekend, they said that. The COT had it set up so that we were showing speculators record short Swiss coming into that. And on Friday, we had a news failure event in the Swiss where the dollar was up a lot against every currency, and there was only one currency that wasn't down on that Friday, which was the Swiss. So that gave me my signal to get long, and I did get long on that Friday. And I came in on Monday, and I thought that I messed up, quite frankly. I thought the contract must have rolled or something like that on Sunday night, or I didn't know what was going on, but it was up like, 30 times the amount that I had risked, like a 30-to-1 shot, right? And it ended up being because the Swiss came out and said that they were going to get off the euro. So that was my best trade because it ended up being like, I don't know, 30 times what I risked or something like that, which you think about, if I'm risking 0.75%, it's like a 25% or whatever trade in a day. That's a whole year. That's a great year. That's actually 2 years to me in a day. And, I love this trade to talk about it because it was my most profitable trade. So that's great. But if you look at it, it meant nothing. People want to argue with me about positioning. As soon as the positioning went away, which was almost immediately because people had to cover, obviously, because they got squeezed, a whole bunch of people went broke. A whole bunch of CTAs came out and blew out on this trade, right? Why? Because they were massively short, as the COT was showing. But if you look at it, once that positioning went away, the Swiss came right back down, went right back down to lows, right? So the story as to why it happened, because whatever with the euro, was really irrelevant at the end of the day, right? The whole thing was about positioning, That's my argument. And it's just like, what's that stock? GameStop, similar thing, right? People were super, super short GameStop. And the thing squeezed higher. It had nothing to do with GameStop. GameStop didn't become a better company. It was nothing. It squeezed because people were super short. And so they got squeezed. That was all there was to it, right? And I think it was the same thing with that Swiss franc. So I would argue that was my most enjoyable trade. But and to say, which one I executed best, they all get executed the same exact way. So, but that was the most enjoyable one simply because it was the most profitable one, and it came out of nowhere, and it was quick. I have a lot of these profitable trades. Sometimes they take a long time. I'll get into a trade, nothing will happen, I won't get stopped, but it'll sit around for a month or whatever, and then all of a sudden it'll go, and I have to sit here and be disciplined and just tell myself, don't do anything, don't trade around it. Today means nothing. If it doesn't get stopped, just sit on it, and and hopefully eventually it works. But that's a lot harder to do when you wake up. You put the trade on the Friday close, and you wake up Sunday night, and you're 25 times in the money. It makes it a hell of a lot easier. So that was probably the best and most enjoyable one. The worst trade
Yeah. The blood.
was probably, and this is where you learn to do what you do. It comes from the worst trades, right? It was before I really used COT. When I wanted to be a contrarian, and I was more on the, like I say, fine line between being contrarian and just being stupid. I was more on the stupid side than the contrarian side back in those days. But in the late 90s, I was shorting the U.S. stock market. Why? Because it was going up, and therefore I was going to be the contrarian and I was going to short it, right? And I kept hearing these people talking about how they're making all this money, and so I'm going to be the contrarian, and I'm just going to short it. I'm not going to wait for the market to confirm it. I'm not going to wait for any of the stuff that I do now that I learned because of this. I'm just going to short it because I'm going to be the wise ass. This was in the 96, 97 area. Everybody was talking about the internet and how bullish it was, and so I was going to be the wise ass that made money on the short side. Well, I didn't. I got run over to the point that I blew myself out. And the one thing I remember that sticks out the most, and I think I talk about this in Schwager's book, so I'm sorry if people read it already, but there was one day where Greenspan came out and said he thought that the market was probably irrationally exuberant. And it was like, there it was, me and Alan Greenspan were the only two people that knew what we were talking about, right? And the market gapped down that day and closed the day up. So you talk about news failure, right there is where you know that that ain't a good idea. The Federal Reserve Chairman just came out and said the stock market is showing irrational exuberance, and the stock market closes up that day. There's news failure right there, right? So again, these things helped me become now. So I would say to people who are maybe having struggles, especially if you're younger, I know it's horrible, but it's actually good. Make these mistakes when you're young, when you don't have a lot of money to lose, when you don't have things like kids going to college and you need this money to pay for all this stuff, right? Make your mistakes now, but learn from them is the key, right? That's what's going to separate the winners, the long-term winners from the losers. Everybody's going to lose money. I don't care, all right? The question is, do you learn from it? That's really the key to this whole thing. Keep a diary. I know no one wants to do it. I know everyone wants to be lazy, but keep that trading diary as detailed as you can so that you can go back and learn from these mistakes. That's how my trading process developed, because of this mistake and because of other mistakes, and because I was putting it in a trading diary and all that. I was able to go back and say what works, what doesn't work. Where was I stupid? How can I avoid that? Where was I successful? How can I focus more on that? That all came from a trading diary. So if I did one good thing during those period anyway, it was that I at least kept the trading diary. So I would say that was my worst and most painful trade. And it also, I have to say, and look, I'll top tick the stock market right now saying this, and that will be fine. But shorting the stock market is the single worst idea ever invented by man. Other than, crimes, but as far as trading and markets going, it's horrible, right? It's horrible. I always compare it to taking heroin, okay? Which I haven't to this point in my life done, but I think that it probably creates the same things in the brain, shorting the stock market and taking heroin, because I've been there. I've made money shorting the stock market. There's no better feeling in the world. You're a hero. Everyone's losing money and you're making money. You're a hero. You're the smart. You've proven to yourself that you are the smartest person in the world. I can make money when everybody's losing money. I'm great. It's so addictive. And yet, over time, it is so long, as we see. Does it go down sometimes? Sure. But I talk a lot about how the people who shorted and caught the short in 08, right? Great. Good for you. But you made tons more money buying the low in 09 and riding it till now than you ever made shorting the top in 08. Just look at the market. Look at the stock market. Look how much it's up since then. Nobody makes the movie, The Big Long, because that's boring. The Big Short is exciting, right? I think The Big Short's done more damage to people than anything else. It was a very enjoyable movie. I liked it. Don't get me wrong. But shorting the stock market is horrible. It's horrible. It's cost more money than I say. Like, my stuff has done very well with the stock market. The most money I've made is probably trading the stock market, and that's been long and short. But frankly, over the course of my life, the most money I have lost in the markets is shorting the stock market.
Jason, you use derivatives, like put positions, or just short the main market?
I'm a futures trader. That's it. I don't do options. I have a problem with options. I'm not a volatility trader. I'm a directional trader. So therefore, if I get the direction right, I have to make money. I can't get the direction right and not make money because the volatility changed, and it happened to me in my own account a few times, and that was enough for me. I wanted to short some stocks, and I was doing it in my retirement account, and they don't let you short stocks, but they let you do options. So I bought a put. I still remember this. The stock went from 250 to 190 over 5 months. And I broke even on the trade because the volatility of the put came in so much. I was buying puts out, 8 months or something. And I lost whatever they call it, the gamma, or whatever the time value is. I lost so much of that I didn't make any money on the trade. I can't have that. I'm a directional trader. If you're an options trader and you're trading vol and all that stuff, then by all means. But I don't have any edge in forecasting vol, so therefore I don't trade options. I just trade the front month futures contract.
Good.
Vanessa?
Well, Jason, this has been the true masterclass in strategy. For our audience who wants to learn more from you, where are the best places to find your work, your website, social media, or your classes, your courses?
Crowdedmarketreport.com is our main webpage. You can go through there. You can also just go to YouTube, quite frankly, and look up Crowded Market Report. I don't know how many hundreds of free videos on there, yes, Crowded Market Report comes with a fee, which quite frankly, I think is very low for the value that you get. But of course, I'm going to say that. But truthfully, on YouTube, hundreds and hundreds of videos that are 100% free. I try to do one every week on some subject, and I've been doing it for 5 years. So there's got to be, 300 videos on there.
300 plus one. This one.
That's it. Well, there's interviews and there's all kinds of stuff. So.
Okay, Jason. You have shown our listeners that money isn't in having a better crystal ball. The money is in having better emotional control and waiting for the crowd to exhaust itself. For everyone listening,
the money is in trying to find good return to risk opportunities. This is how I do it. There's other ways to do it, but that's where the money is, not in trying to predict the future. And trying to find, you have to focus all your time on where am I going to lose $1 and make 5.
For everyone listening, if you want to understand how the real money operates, go read his chapter in Unknown Market Wizards and follow his work at crowdmarketreport.com. So, Jason, thank you very much for your time, your transparency, and for sharing your edge with Brazil. And I hope your sugar trade works very well. Thank you very much for being with us today.
Thank you.
Thank you. Thank you all, Vanessa and Rafael, the
Thank you.
couple, co-host couple.
Thank you, Jason.
Nice talking to you guys. You make a nice couple.
Thank you.
Thank you.
So, guys, that's it for this week, traders. Remember, if everyone agrees with your trade, you are probably about to lose money. See you next time, and bye-bye.